Hello, everyone. Today we are going to start by answering this question. I wanted to reach out for some guidance. I have a client where I've received all their payroll reports. The CPA I am partnered with wants me to break down the income into owner versus non-owner compensation. And I'm pretty sure what they mean here is wage expense. Um, so They go on to say that they have only the W-2s, 940s, 941s, and W-3s. They do not have any payroll reports or pay stubs. Okay, so first we look at the W-2s and the W-3. So I just created a sample company here, and Joe Builder is the owner of this company. So we are going to put a enter a credit in for the gross wages, which is the 78,750, not the amount that appears in box 1 or 16, because that is the total wages less the retirement. And I didn't add retirement expense and owner. Oh, you know what? This is all withheld. There are retirement expenses and owner retirement expenses, but given the limited information that we have, we don't know what that is. So I am not going to include that in this video here. Then the next thing that we want to do is take the payroll tax expense for the FICA. And even though we don't have what the business paid, we can deduce it because it's almost always going to be the total of the Social Security and Medicare that was withheld, because the employee pays half and the employer pays the other half. So we'll just throw a formula in here. And then we'll copy that here. So we're always crediting the payroll expense and debiting the owner payroll expense, because we need to reduce what was on the books and move that in the general bucket, and we need to increase the owner payroll cost. And they said they don't have the state unemployment, but this is just the easiest way for me to look up what the state unemployment wage base is. So we'll put that here. So we know that they made the wage base because their salary was 78,750 and the wage base is 35,000. And this will also tell you what their tax rate was. And in this case, it's 0.1 plus 0.1%, so 0.2%. And we'll throw that number here. So we're reducing the payroll tax expense in the books and increasing the owner payroll tax expense. And we have to do the same thing for FUTA. But for FUTA, that's pretty simple because the federal wage base is $7,000. And if we have the 940, it will tell you what the wage or what percent they paid. And it is the discounted rate of 0.06%. And I forgot to put the equal sign in, so we'll just throw that in. And I forgot 10. So the total is $42. So that is really quick and simply how we take our limited information that we have and break out the owner's wages from the payroll expense.